Yes guys, welcome back. So let's quickly revise Ind AS 41 with the help of our chart book. 1. The scope. This particular standard Ind AS 41 only applies to biological assets other than bearer plant. And agricultural produce that you get only up till the point of harvest. Till the point of harvest, this particular standard is applicable. After harvesting, it becomes inventory and Ind AS 2 applies. And if you have received any government grant relating to these biological assets, which are measured as per Ind AS 41, then the government grant accounting is also done as per Ind AS 41 itself. But however, for few things, Ind AS 41 is not applicable. 1. If you are using any tangible assets like land for agricultural activity, for a tractor for agricultural activity, those tangible assets will be accounted as per Ind AS 16 itself. They are not accounted here. Okay. Then bearer plant as per Ind AS 16 again. If you have received any government grant relating to bearer plant, then Ind AS 20 accounting for government grant, that will apply. If you have used any intangible assets for your agricultural activity, a software which checks the fertility of the land, etc., those intangible assets will be recorded as per Ind AS 38, which we already studied. Okay. And if you are a lessee who has taken the land on a lease, then lessee has to record ROU asset. Okay, if that land is used for agricultural purpose, then the lessee will account ROU as per lease standard, which is Ind AS 116. Then agricultural activity. Agricultural activity means you have to manage what? A biological transformation with an intention to get some produce. Either you can sell that produce itself or use that produce for further production. That is what we mean by agricultural activity here. And biological assets are of two types: living plants and animals. There are 3 recognition criteria for biological assets. You can show biological assets in your balance sheet provided 3 criteria are satisfied. 1, it should be an asset, meaning it should be within your control. From that, you should get some future economic benefits, FEB. Either fair value or cost, you should be able to measure it reliably. These are your 3 recognition criteria. Then, how will you measure biological assets at? Initially, as well as at every reporting period ka end, every year end, you will measure it at fair value less cost to sell. Okay. If you are not able to determine fair value due to any reasons, then only you can go for cost model. Under cost model, you will measure it at cost less. If there is any depreciation, reduce it. If there is any impairment loss also, if there is any, reduce it. Okay. Then agricultural produce till the point of harvest, it will be measured at fair value less cost to sell as per Ind AS 41. And that fair value less cost to sell itself becomes inventory, or it becomes cost for inventory purpose, because after harvest it becomes inventory. So after it becomes inventory, Ind AS 2 will be applicable. For Ind AS 2 purpose, we need cost, no? So that fair value less cost to sell itself becomes cost for Ind AS 2 valuation purpose. Okay. Then you could have 2 types of gain relating to biological assets. One is your price change, or another one due to physical change. Doesn't matter whether it is price change or physical change, both the gain or loss will go off to SPL itself. If you have received any biological assets, grant relating to biological assets, then check how is that biological assets first of all measured. If it is measured at fair value less cost to sell or cost model. If you are measuring it at fair value less cost to sell, check whether the grant is conditional or unconditional. If it is unconditional grant, you will recognize grant where? In SPL. When the grant becomes receivable. If it is however a conditional grant, then will you recognize grant in SPL? Yes. When the conditions are met, when the conditions are satisfied. If however, if biological assets, if it's measured at cost, you'll have to apply government, this standard. Ind AS 20 talks about how to account the government grant, which we already discussed. Either you can reduce from the cost of the asset or treat it as a deferred income. Okay. Then some disclosure aspect. Give a brief description of the biological assets you have, whether you have biological assets in the form of cow, sheep, goat, plant, etc., etc. Give a brief description about it. Then 2, for any biological assets, if you are not able to find out fair value, give for what biological assets you are not able to find out fair value and why you can't find out fair value. Since you are not using fair value, you will go for cost model. For cost model, we need useful life. So how did you estimate the useful life? Disclose that. Which depreciation method did you use? Disclose that. If you have received any government grant relating to the biological assets, disclose that. And reconciliation from opening balance to closing balance of biological assets, you need to disclose. These are some disclosure aspects relating to the biological assets. So this was your quick revision relating to Ind AS 41. Thank you.